Okay, so before we begin the other things, let's just get good foundations in why we're doing this. Let's just first try to be able to understand the differences between the two types of analysis that normally investors want to be able to review on. There is such a thing as fundamental analysis and, of course, technical analysis. These are the two branches in analyzing stocks. The first, fundamental analysis, talks about reviewing your economy, industries, a company's financial statements, how's management coming along to be able to build a business well. And its primary goal is to try to evaluate what are the prospects for a company's growth and how valuable is the business given the context of what it's doing. And it answers the question, is a company cheap or is it too expensive? And by answering that type of question, you'll be able to get a sense of whether it should be timely for you to be able to look into a prospect of investing in a stock or not. Now, technical analysis does something completely different. Now, technical analysis does not look at growth and value. It leaves that up to fundamental analysis. But technical analysis reviews the movements of prices in any market or any security. It studies movements in trends, area patterns, and momentum. And its basic assessment really is to try to evaluate these movements in price and see whether is there demand or is there too much supply coming into a situation that might push a stock up or down. And we'll try to reveal a bit more of that when I start giving you the primer as we come along. And the basic sense of what technical analysis does is it answers the question, is it the right time to execute your buys or to execute your sell? So in the other way, fundamental analysis kind of tells you cheapness or being expensive. So that tells you whether you should be looking to a company because it's cheap to make an investment, or if it becomes too expensive, then you'd sell. Whereas technical analysis will look at the buy and sell purely by looking at the movement and the intonations of what price does. And that's the only input that it really wants to be able to look at. Price and maybe along with volume together, they should give you good depth into understanding what markets are doing. Now, in terms of being an investor or trader, technical analysis is really for the trader. If you're wondering what the difference is, an investor normally, when you buy into stocks, you're really buying that for a long-term prospect haul. You're looking for preferred values or discounts in prices so that make me quite warranted for you to invest in it so that your upside later on can be quite telling. So you start setting a position when it's kind of fairly priced. And little pullbacks in price should not worry the investor because you're gearing for the long term, and little price hiccups should not really bother you so much. Now, I know it's easy to say that, but when prices are coming down, of course, it's really quite telling because your emotional well-being is put to the test when that happens. Now, as a trader, you do things a little bit more differently. You start looking for buys and sell windows into stocks more into the shorter term rather than too much in the longer term. Your entry and exit plans are driven by set rules, which we will talk about into the next few sessions. And your aim here is really to try to generate better returns than what just investing would do. And if in the end you don't get to do that, then you really probably want to just come inside and become an investor, and you probably just want to look at mutual funds or index funds to be able to score it up if you feel that all of this is just too difficult for you to do. And so I wouldn't say that technical analysis will be for everyone, but I think everybody can learn it. Now, how well they learn it and how degree of mastery they can come in really depends on how you are. What is your mental condition like? Are you a very stable person when it comes to trading? Or if prices are moving up and down, do you really get shaken out right away? And that all changes things. And that's why you have to know that your risk tolerance here becomes very important. And one thing for a trader that he manages quite well is the essence of risk. Because risk is everything. We can only start trading as long as we have the ammunition to trade. And that means if I do have the funds to trade, then I can be alive and I can be a participant and I can have the ability for the market to be able to give me something. But the minute my capital washes away, the ball game ends. And that's why it's very important here that trader understands that he can only stay in the game as long as his funds remain quite appropriate to be able to do that. So here, the essence of risk, we watch quite carefully, and we will not allow ourselves to step over an open manhole and allow us to drown ourselves back into a very deep loss. So all the things we'll be learning today will teach you how to be able to look at the market, how to be able to position yourself correctly, how to be able to make sure that when you take a trade that you don't take too excessive amounts of risk, and how to be able to make sure you drown away all the little noise out there and only pick the particular trades that's really warranted for you. And this is what trading through technical analysis will give you.